from WorldGranny. During her presentation, she discusses and argues how we are facing a demographic time bomb. The world is set to change within 40 years, she states. Older people will reach 2 billion by 2050. 80% of these 2 billion will live in developing countries. Life expectancy in developed countries will reach 83, and in developing countries will reach 74. For the first time in our history, by 2050, she states, there will be more older people than younger. This, of course, causes numerous challenges. The solution to these challenges lies in pensions, she argues. Van Dulleman states that if everyone is to have access to pensions, all three pillars must be used. WorldGranny and the Pension and Development Network targets informal sector workers with third pillar micropension systems. They have developed vast experience and knowledge of third pillar pensions and use this to help informal in-sector workers in developing countries access a pension. Micropensions are tailor-made and are a scheme of fixed contributions, she states. The participants can save over a set period of time and at a predetermined age can withdraw the sum in lump sum or monthly payments. She states that the built-up savings from micropension schemes are invested by professional asset managers. WorldGranny and the Pension and Development Network has micropension projects running in Asia, Africa and Latin America. She argues that micropensions are not a McDonald's type of pension, where one type suits all. For investors, she states that micropensions offer a huge potential to unlock new markets, especially the new markets of low income and long-term savings. She argues this is excellent opportunities for insurance and financial companies. She argues, let's face it, failure to act now is not an option. If we do not act now, we will see a rise in the number of old age people facing neglect, abuse and poverty. Let's face it, she states, we have a global responsibility in this. No one wants to see the people who have helped build such a great society in such a position. WorldGranny and the Pension Development Network would like to share these experiences from Micropensions Project across the world with you in this webinar. They hope to share this knowledge and inspiration with you and hope to inspire you to become involved with micropensions yourself. So without further ado, I would like to begin with the next presenter, which is the DAN Foundation.
DAN Foundation works on a 4-generation model. First we start with a social capital formation by organizing the unorganized. Then we link them with the banking system for a financial intermediation. Then not only financial intermediation, we also take them to the livelihood enterprises development in a large scale. And finally, we take them to civic intermediation, mainly health and education. The whole process of this development takes at least 10 years. Let me introduce how we evolved our micropension from our insurance program. In 1992, we started with a funeral expenses cover in 2 federations. Then we moved into livestock insurance. Then we introduced in 97 our mutual life insurance for the life alone. Then in 2000, one of our federations started a mutual health insurance. Then we also moved into a government pension program, KSSY, Kisan program, that's mainly for farmers. Then finally we set it up a kind of a specialized institution called People Mutual, mainly for insurance and micropension initiative. Then we also introduced a kind of a new program on rainfall index for crop insurance. We also really moved into setting up a hospital for community hospital for insurance. Then in 2000, I think around 10, as I said earlier, the rainfall index was there. Then finally we really launched in October 2011 micropension. This is a kind of genesis of our program. Currently we cover around 1 million, 1.14 million insurances. Life is occupying the major portion, which is around 8.7 to 8.7 million. Health also around 200,000. Livestock is also 13,000. So altogether, our reach is around 1.14 million. I think this micropension pilot started and built on a earlier initiative. This is our savings first. All our members saves first. Then they move into the linkage with the banking system for a credit and followed by insurance. So this is our slogan: savings first, credit next, insurance is the first. This is a building block for micropension. Because through this system, we really created a kind of computerized system for all the accounting, collection, disbursement. It's all done through that. The pension is really as a longevity insurance for a dignified life, for the old age. In fact, WorldGranny supported us for a screening survey, a feasibility study for a micropension. That took us about a year for us to get prepared, to understand poor people's willingness and their affordability. That project, with that we started a project in 2011 with the support of Micro Insurance Foundation, the Netherlands, in 26 Federation of the Poor. Though our pilot was initially for 10, many people came in support of that. So currently, we have really done up to 6,308. Our plan was to reach to 5,000, but there was overwhelming response from here. The difference between the micropension program from insurance company than from mutual insurance from our federation is, here the whole product is developed with the participation of the community. So there is not much of need to really push the product through kind of literacy and other kinds of things. Let me really give a features of our micropension project. The Life Insurance Corporation of India is the fund manager. We chosen them because they are the market leader in pension fund management. Not only that, they enjoy the privilege of sovereign guarantee of its funds because of the Government of India's ownership. The market risks are not borne by the pension contributor, and minimum returns are assured by the Life Insurance Corporation. The Dawn Micropension program is customized product which is evolved by Dawn and managed by LIC under the Insurance Regulatory Authority of India. If you look at our product specification, the age at entry is around 18 to 54. The vesting age, pension age is 55 years. Contribution is minimum Indian rupee of 100 rupees or multiple of 50, and it can be paid in a flexible way. It could be monthly, quarterly, half yearly, or annual kind of contribution. So that flexibility is given because of the people income is not really regular. They are unorganized sector. Then possibility of kind of lump sum is also done. Somebody has saved some money for so much time, they can also come back. Here also exit also there, but it's really after the 5 years. Then minimum 5 years is really very much important. Then there is a kind of during that exit, accumulated fund will be given back. Pension could be given from pension age. There are the two options there. The pension benefit is also, we have given about two kind of options. One is our life pension, then life pension with the return of the corpus. So the life pension gets a more pension. The life pension without with the return of corpus will get a less. I think in these all these poor are organized into different institutional framework. Dan is really working with them last more than a decade. About 1 million people are organized in that. Out of that, 10 federations we have taken, but now 26 federations has really moved in. The pension literacy is not that much important here because the whole process is evolved with the community with a series of process, and the leaders and as well as the staff are really trained in this. I think the future of the pension is we are really planning for about reach around 25,000 people during this pilot stage. probably will really cross that thing because of the overwhelming response from the community. Not only that, this is a 5-year with the Micropension Foundation. What we are saying in the 3rd year of our pilot, we will now plan to really expand it to at least 200,000 more families, the poor families. Then probably at the end of about 6th, 7th year, we would really move into another at least 500,000 families. That's a future plan. I think this pension program overwhelming response from the community very much.
Without further ado, we will begin with the CIC presentation on micropensions. So if Jack from CIC, if you could enable your microphone and webcam.
Once again, my name is Jack Kionga. I'm working with CIC Insurance Group, and I wish to apologize about what has happened a few minutes ago, but I hope you can hear me clearly. A quick word about CIC. Our mission is to provide financial security for the people through the cooperative spirit. We are kind of a mutual insurance company owned by the cooperative societies, and our vision is to be a provider of insurance and other financial services through the cooperative spirit. We are owned by about 1,560 cooperatives, societies, and 3,900 individual cooperators. We also have a bank that has a significant shareholding of CIC, and maybe to add a bit, we are the #2 insurance company in the Kenyan market. Grown very fast because about 5 years ago we were #8, now we are #2. But I think more importantly is that we are leading insurer of cooperative and the microinsurance sectors. So as a structure, we have 3 organizations with the CAC Life Assurance, CAC General, and CAC Asset Management. And this is how we've been looking at micropension and implementing it. First of all, we have a vision, and from that vision, we need to address the issue of poverty, financial insecurity, financial dependency among the low-income families. As an African country, when we talk about low income, we know that a significant population of the society, like in Kenya, is actually low income. We're talking about 2.5 million people formally employed, and the rest of the population, adult population, involved in the informal sector. But even those who are in the informal sector, their incomes are rising, they're increasing. There's a huge market potential. Pension penetration, though, is only at 15% of the adult population, most of it in the formal sector. So the opportunity for micropension is huge. And the need for intervening in the micropension area is also very huge, because these are the people who will be retiring and will not have a formal way or a formal place to get retirement income. However, when it comes to technology, which is a very big driver of insurance in Kenya today, or is turning out to be in a pension, Kenyans have got a very, very good grasp of technology, especially when it comes to mobile technology. The penetration rate of mobile phones among the adult population in Kenya is over 95%. And those people are using the mobile phone not just for communication, for talking and SMSing, but also for transfer of money. And this has created a huge opportunity for us. The MFIs also have grown very, very fast. The growth of insurance and pensions actually can be leveraged on the growth of the MFIs. Already insurance has grown at a tremendous rate because of leveraging on credit that is given to this micro sector by MFIs. And it is the same route that also provides, one of the routes that provides an opportunity for the growth of micropension. However, CIC has taken a very interesting route. As opposed to, first of all, concentrating on using MFIs to grow micropension, we have decided to adopt the growth in technology. We have a product which is actually a multi-purpose product. We can't just call it a pension product, because at the piloting stage, we realized that the regulation, the way the pension is governed in Kenya, if we try to do a micropension based on just the Retirement Benefits Authority or the authority that regulates pension, then it would be too expensive to provide that service to the low-income sector. So we developed a product under the Insurance Regulatory Authority. So it was a savings product with a bit of insurance, which is also necessary, but the emphasis is on savings and on guaranteed returns. That allowed us to be able to develop a product and also have the leeway of administering the product instead of having to give somebody else to administer, have the leeway in terms of fund management or asset management or the investment of the funds, and in a way make the process of taking pensions to the people much, much more cheaper and cost effective. So what we have is a product that is at the moment riding on the mobile phone in terms of distribution, capturing of information, in terms of the payment of premium, and therefore also being able to get quite a bit of the target that is actually using the mobile phone, because we have about 18 million people who are actually using mobile money. However, having said that, it's not to say that we're ignoring the model of the MFI. We just feel that with the M-Pesa, for example, we have this product called the M-Pesa, which is a mobile way of transferring money between individuals or between individuals to organizations, organizations also to individuals. We feel that riding on that, we get a higher population, because M-Pesa is about, like I said, 18 million, and therefore that is the route that we have taken. We have negotiated reduced transaction fees for the people who are joining the micropension plan, because we bear the cost of transaction, so that when somebody sends whatever amount of money they send, there's no additional cost that they have to bear for transaction. When we talk about target groups, we're talking about 8 to 10 million people. These are the people who are actually making some form of income in the informal sector that allows them to have some form of surplus that they can use for purposes of savings. They're both in urban and rural areas, but the characteristics are not very, very different, because even the rural areas, they're becoming quite urbanized in terms of the informal sector. The big cities provide a model for how the informal sector will grow in the rural areas. Then the other thing that is also very, very important about these characteristics, about this particular target, is that they use a wide range of coping mechanisms, but many of them really do not have a formal way of dealing and preparing for retirement. We have had some instances where we have the pension body try to actually come up with a product that they can join in. But the fact of the matter is that these are not people who will actually go and take up a financial or savings product without some form of strong engagement. And so what we've decided is that we come up with a product and then we come away of educating the client. As a matter of fact, we know that one of the ways that we've been growing, and we're going to continue growing this product, is by constant contact with the client. It's by activation, it's by education, it's by continuous research and adapting to the needs of, or to the responses of the market, adjusting the products and the benefits accordingly. And therefore, we have actually taken a model where we use networks that are connected to the people. We train the networks, we support the networks, we have people who are attached to these particular networks. That is one way. The other way is we have developed a contact center that keeps on calling a proportion of the people who have taken up our products, because we need to have constant engagement. In terms of the payment for the product, we've created a situation where people are able to pay or to make their contributions in a flexible manner. And with the way that we have the mobile money, it means that they're able to make their payments, their contributions from where they're seated when they have the money. They can do it on a weekly basis, which we encourage. Some actually do it on a daily basis. When it comes to client interaction, we know the aspect of trust is very, very important. And that is why we've talked about using distributors who are close to the people. The other thing that we've done is creating a branding within those people who are using as distributors, so that people have a constant awareness about our brand. And at the same time, the activations also provide that that point of interaction with clients where they can ask questions. On a regular basis, when a client makes a payment, for example, they get an acknowledgement. We provide weekly statements so that they're able to actually know how the account is doing. If we have to make a payment, we also do it on the mobile phone so that we take away the inconvenience of these people having to walk to a physical location. Of course, there are issues about the cultural attitudes, and part of the problem that we're having to deal with is the aspect of savings, because we do not have a very strong savings culture. But we believe that this is an issue of education, because one of the things that we've noticed with the advent of MFIs in Kenya is that where there is an incentive. Okay, so we have actually developed different kinds of messages for different segments. Some of the messages are positive, encouraging people to save. Others basically are geared towards telling people the consequences of not planning for retirement. And the consequences in terms of explaining them out is not very difficult, because you just need to show someone who was active over a long period of time, did not get into any form of pension, and the suffering that they're undergoing because they're not able to get the kind of income that they should be enjoying during old age. We do have a few problems that we are facing. In terms of technology, we are not as developed as, of course, as developed countries, but we are fairly well developed. So sometimes, this being a technology product, we have a problem with data outages and network problems, but that is something that is more internal than anything else, and which we are addressing quite a bit. The other thing also is that this being a retail product, having taken a retail approach, the distribution cost is extremely high, because we're talking about creating awareness, we're talking about doing those activations, we're talking about engaging alternative distribution channels and training them, and these are distribution channels that are not traditionally pension channels. So, but we see this as just the initial acquisition costs of getting the business, but over time, as we engage the people more, we should expect that this should not be a very big problem. Of course, one of the things that we've also realized by using alternative distribution is that sometimes the message that we're trying to send out may not be actually the message that people receive, and this has an impact in terms of getting people to buy what they're supposed to buy, and also the impact of brand reputation. But that's another thing that we're blunt and we're dealing with by just having a closer control of the distribution network, and also ensuring that the messages that go out are appropriate and they're proper and they're getting to the target. So I think I've mentioned about some of the solutions, the challenges. The aspect of trust is also very, very important, and we believe that by leveraging on trusted networks, by leveraging on a network system where we use our clients who have already consumed and some who have already benefited from claims, will also help us increasing the market. In terms of regulation, we are quite fortunate because in this particular case, because there is a very, very strong desire by the government to increase the penetration of pension, regulation is not a big problem for us. We've actually been able to convince the regulators in terms of using distributors other than the registered distributors, using people who are doing other things, who are probably having other forms of occupation, but are able to understand our products and talk about it. In terms of uptake, we've not gone out full scale, but we have about 8,000 active people so far. And the reason why we've not actually scaled up is that our intention has been to actually first of all get the lessons, learn the market, learn the technology, learn how they adopt it to their understanding the benefits, so that when we do a scale up, we do an intelligent and a well-informed scale up. And finally, what I've described is more or less a retail model leveraging on the M-Pesa technology and the mobile phone technology. We've also approached some MFIs in terms of now going into a partnership model, and that is something that we're expecting to do from the second half of next year, so that we can have two things running. We can have a retail model where we're leveraging on the mobile phone technology, and we can have a partnership model where we're now targeting the clients, the MFI clients, the existing MFI clients, and also using the MFI as a distribution networks and and probably also as custodians for the funds that we receive from our clients. So just a bit more about the value proposition to MFIs. I think I've probably mentioned about the benefits to MFIs. There's the aspect of differentiation, because now we are getting quite a saturation of MFIs. So I think the ones that will come on board, there'll be the advantage of differentiating themselves from just being the regular microfinance institutions to providers of a bouquet of services. The MFIs also benefit from enjoying the commissions or the fees that come about in distributing the product. The product, actually, there's a 5% maximum commission on the first year, goes down to 2.5% second year and 1.25%, which is attractive as an additional source of income for both alternative distributors and the MFIs. Of course, the clients' benefit have been described, because they're able to access not just loans and normal savings, but also they're able to build up income for retirement. And just to share a bit of feedback from the market, we noticed that we've tried to categorize different types, the savers and the non-savers. We've tried to also categorize the market in between those who can actually afford and those who cannot afford. But we also know that those who cannot afford today may be the same ones that will be able to afford these particular products tomorrow. We've also done a kind of an income categorization and an age categorization. It's fairly limited research. So that really is what I have to share for now. I think the future is bright, and we are just at the beginning. Thank you very much.
On behalf of WorldGranny Pension and Development Network, myself and Caroline van Doeleman would like to thank CIC from Kenya, Jack Kionge, also the Dan Foundation and MP Vasamali, and of course the lovely Francisca Franks, without who none of this would have been possible. We are eternally grateful, and we would also like to thank our sponsors for the day, Aegon and APG, whose continual support is much appreciated.